Hello everyone and welcome to BNSN on Campus, one of my favorite shows because this is a show that endeavors to empower the youth and give them the confidence, and God knows we need some right now, to invest in the stock markets. We've trekked all the way for the first time for BNSN on Campus from Mumbai all the way to Manipal at the TAPMI Management Institute. It's one of the premier B schools here in Manipal, and I can assure you that this is going to be a very interesting half hour. Let's introduce then our guests who will be guiding us over the next 30 minutes. Joining in on the show, we have Supreet Shankagal. He is the CEO at QF Asset Advisors, as well as Gaurang Shah, VP Geojit BNP Paribas Financial. Welcome to the show and thank you both for being with us.
Thank you.
I'm going to start off actually, Supreet, with you because it was an interesting quote that you mentioned in your presentation to us, saying that investment success does not require glamour stocks or bull markets, and we're certainly in very trying times such as this. So can you walk us through some of your pearls of wisdom for investing in the stock markets?
Yeah, investing is a kind of activity where you don't need bull markets all the time, because we are entering a very challenging kind of a scenario wherein every other day we have global markets falling and we have this problem and that problem. But we as a financial professionals or future financial professionals should learn to use the present market and be flexible. There are enough instruments which allows us to make money in these kind of markets. So knowing about derivatives is very important, because derivatives is one such instrument which can be either a weapon of mass destruction or insurance if you know how to use it well. And I would certainly say it's the second one which we should be looking at as, because amateurs use futures and options and they get burnt. But we as students of finance or finance professionals should know how to use these options and futures to our advantage, and then you don't have to worry about bull or bear markets. Every other market is a wonderful opportunity. In fact, these markets are more challenging and it kind of gives you more opportunity than in a straight line bull market.
You know, speaking of bull markets, it's so difficult to use that word nowadays, Gaurang. It's such a risky place. And we're with second-year students who have specialized in finance. And we've been discussing this a short while ago as well. It's a risky time in a market like this. Any specific do's and don'ts?
Well, equity market comes with risk, Avan. It's the high risk, high return kind of an asset class. So unless you understand what you're doing, please don't do it. That's the simple thing that I would want to tell you. And understand what you're doing very clearly.
But everyone here understands and more. That I'm sure of.
So I'm glad that possibly I'll be seeing them soon in the equity market and as they pass out from this institute. And I'm very glad that institute like TAPMI are conducting these kind of shows. Be extremely careful. Equity market, like I said, is all about risk, and you should understand what is your downside before understanding what is your upside. In the sense, you should be prepared to take a hit before booking your profits. And it's only when somebody loses money in equity market that somebody makes the money. It is not like the institutions or the exchanges pay out of their pocket. So remember one thing, it is only when somebody loses money is that somebody makes money. So you need to be on the side wherein you make money and don't lose money. And the first rule is that unless you take a hit, you will not be able to identify that hit stock which will make you multimillionaire. So be very careful, but at the same time, have the conviction and confidence and understanding of what you're doing.
Well, I sure know that in this crowd, we have our future Mitesh Thakkars and Gaurang Shah sitting. And before they give us some advice, let's have some questions from the students as well. Why don't you start?
Hello, sir. My name is Shayan, and my question is regarding the upcoming budget this year. So what are the market expectations? As in, like, how is it different from last year's? That's my question.
One good thing about this budget is that we are going in with this budget with extremely low expectation. There is absolutely no desire or no wants that are multiplying like in the earlier budgets. What I would want to see personally is the government, it's time to walk the talk. Enough of talking. Now start implementing and doing things. We've heard about ease of doing business, make in India. We've heard about FDIs getting opened up in insurance, in defense, in railways, etc., etc. But is the environment and policies and tax structure conducive enough, and is there clarity? I think that's a big question mark. And it is only when you resolve these issues, because I would just identify one particular sector, infrastructure, which is the need of the hour, let me tell you. Because at the kind of GDP growth rate that we are clocking right now, 7.5, and if you have the desire of going at 8.5 plus, then you need to improve the infrastructure. It is only then and then that you will be able to clock that kind of growth rate. And if you don't spend in infrastructure, then I think this growth is going to come at a very lag effect. And by the time you get that kind of growth rate, it's going to be late. So infrastructure spending is something that I want the government to possibly emphasize. And I hope when the Finance Minister, Mr. Arun Jaitley, stands up on the 29th of Feb to deliver his budget speech, he possibly should be having a good amount of budget allocation for infrastructure.
Supreet, anything that you'd like to add to that? Because in fact, you seem to be of the view that despite the fact that India's macros remain resilient, we're clocking in, we're targeting very strong GDP growth, one cannot remain insulated from what's going on overseas.
Exactly, because we, as our markets is kind of still ruled by foreign institutional flows. There's not much of domestic participation coming in from our investors. So we are not kind of insulated from what is happening in the world. So every time something happens anywhere in the world, we are affected. And the most important factor that is going right now is the currency problem. So there seems to be a currency war everywhere in the world. China is devaluing the currency. Malaysia is devaluing the currency. When everybody starts doing this, it kind of seriously affects the market environment all over. Because when you start devaluating with currency, no matter what your economy is or how strong it is, things are going to be affected because you have a lot of these foreign investors sitting in with huge portfolios in these companies. So when they start getting losses on their currency as well as on what is happening in the markets, patience is running out. I mean, you would see a lot of outflows because of that. And two, our government has been talking about a lot of actions ever since they came into the parliament. Nothing seems to be happening. It's just more of promises and no action. So probably investors are fed up. So they're not looking at this budget with great expectation, as Gaurang said. So yeah, it's not going to be a major event per se to watch out for. We have other major problems to look out for this year.
Okay, brace ourselves for perhaps a bit of a damp squib this budget, but let's get the next question going.
Hello sir, my name is Ankit. My question is with regard to the oil prices. Now, I read a report a couple of days back, and the report said that we might see oil prices going up to $85 by the year end. Do you think, is it possible? Because OPEC nation might not cut down their supply. And second question is it the right time to invest in the upstream company, considering they are under stress now?
Interesting he asked that question because Gaurang, just today on our car journey here, you were saying oil prices are going to go down even further.
Yeah, so, well, two aspects of this particular debate on the great crude oil crash that we've had. And let me tell you, Ankit, India is only in the more sweeter spot in case if crude oil prices are lower, because our oil pool account deficit comes into a very manageable target. And I guess that along with this infrastructure budget that the finance minister will be delivering, he'll have a very comfortable deficit number also. So my sense is, and I've been, in fact, about 8 to 9 months back, I had come out with the report on crude oil. And that time the crude oil prices were ruling at $85, $95, both on the NYMEX and Brent respectively. And our view was that we are heading lower. My initial targets were somewhere close to about $40, $45 a barrel, but we have actually gone sub 30. So my sense is, the question that you put, whether crude oil prices are likely to go up to 85 by year end, well, I hope not. Being an Indian and investing in Indian equity markets, I hope not. But at the same time, we are dependent on global fund flows. Unfortunately, there is a lower single digit percentage of population that invests in equity market. I hope by the time you guys move out of this college, you are able to attract a lot of retail investors. Thereby, we don't have to worry about foreign flows. We'll have enough population. We are a large population, but unfortunately, the number is very low investing in equity. So the point is, unless there is a meaningful disruption or distortion in the global crude oil supply pipeline, or there is a sizable amount of a large percentage cut from OPEC in terms of the output, I don't see anywhere crude oil by the year end going even close to $60, forget about $85. Even if we are at $60, we are manageable, because if I'm not mistaken, our crude oil basket is about $70, $75 a barrel. So we are very, very comfortable. But this is a great time for Indian companies who are into upstream oil exploration business to go and buy assets globally because they are available at a very cheap rate. And we as a country import almost about 75 to 80% of our fuel requirement. So if we're able, and unfortunately, I would like to see the finance minister also announce certain tax ops for oil exploration on stream and on field and off field, because that's where I believe there will be a great opportunity. And if we are able to safeguard our future dependency on crude oil by investing in assets overseas at this point of time, then we'll be in a very comfortable situation. But unless, like I mentioned, these 2 points, I don't see crude going at 85.
Okay, hope that answered your question. Tell you what, we'll slip into a quick break, but we'll get in some questions from the backbenchers as well when we return. Stay with us. This is BNSN on campus. Thanks for staying on with us. This takes me back to the good old days. This is BNSN on campus, and I'm at the TAPMI Management Institute here in Manipal with our bright students. So let's take it straight to our next question then.
Hello, sir. My name is Shaurya. I wanted to ask a question about the pharma sector. The backdrop of all the major pharma drug producers in India being served with US FDA warnings, particularly due to increased regulatory environment. So what kind of transactions can we expect or deals can we expect in the pharma sector, like more towards consolidation or more towards portfolio diversification? And
Too many bitter pills we've been swallowing. Supreet, any advice here?
Pharma is one such sector where you can't really come out with an exact outlook for any period of time, because these days the FDA warnings or FDA fines are increasing more and more. So, and also pharma sector as a sector has been very expensive, at least in India. So I would advise ones who are starting out early to clearly look at other sectors. There are better sectors to watch out for, and pharma is definitely stay away from pharma.
Okay. But Gaurang, any picks that you have? One can be
I would
stock
love
specific.
to beg to differ over here. And I think
We
it's
love
always good
arguments
to have
on
a
different
difference of
sides.
opinion. So let me tell you one thing. If you are in the business of making life-saving drugs, you need to have your facilities, you need to have your drugs, and you need to have your manpower up to that international standard. If you are not up to that standard, you have no business to be in that kind of a business. Okay, that's very clear. And I have not heard a single company which has been pulled out by US FDA complain about being a victim. Nobody has complained about it. So there is some deficit or the other, and the management have accepted it, and they have also made an effort to resolve those issues. I would say that the run rate of pharma in terms of last 2 years numbers and creating value for investors will continue going forward. But it depends what you're buying over there. So like I said, you need to understand the business, and today
So share with us, what can we buy?
So I'll tell you what. Today itself there was a news about US putting a policy in place that 80% of the APIs should be made in US and they should not be bought in from China or India. In China and India, almost 80% what is sold makes the API. So I would say that Sun Pharma, Lupin, Dr. Reddy's, Shingen, Glenmark, Cipla. Should I go on?
Oh, it's an
There are a whole host
extensive
of
list.
names that I am extremely comfortable buying, and all these companies have actually corrected over a period of time. In the last 6 months or 1 year, or the kind of run rate they have done over the last 2-3 years, this 6 months they have kind of consolidated. There are issues, there are red flags by USDA, but these managements are capable enough to resolve these issues, and they have been in this business and they have seen it and they have done that. So I don't think so you'll go wrong buying pharma.
We never have a show without a pharma question, but let's get in the next one then.
Hello, sir. My name is Sumukh Bharadwaj. Sir, I wanted to ask a question specifically about the non-oil commodity space. Now, India being a net commodity importer, we benefit from low commodity prices, and we are at the lower level of the commodity cycle right now. It's like a two-edged sword having low commodity prices. If the price decreases to such a low level, especially during a China slowdown, China decides to dump its goods in India. And India going out and saying that, we want to have a manufacturing economy and all. What do you think about the possibility for Indian competitiveness over the next 12 months, assuming that China dumps in the Indian market? And what's the impact on that on the equity market?
Tough one.
I would say that we are in a tough spot as of now, because China is a big boy. We are relatively smaller to China. And whatever happens in China, we will follow the suit. We are nowhere going to be isolated in terms of any kind of negative effect not coming on us. We are not going to be decoupled That word was a bad word some time back and it still remains. We are a part of the global economy and we are a part of the emerging market basket. And whatever happens in China, which is supposed to be an emerging market basket, will happen to us. But we are relatively better off. So lower commodity prices, your question, China happens to be the largest one, and they have actually very recently put in a ban in terms of new additional capacities coming up in metal, and they have also restricted the capacities in China. So my sense is that in the next 3 to 6 months, if economy in China stabilizes, if across the globe consumption starts picking up, then you will see some amount of stability coming in, and then you will see the metal prices. If your answer is to the metal sector, then let me tell you, my friend, that we are going to be on a holiday for the metal pack for the next 6 to 12 months. Because for these economies to recover and start consuming, it's going to take that kind of a while. For the numbers of this company, it's going to be a very bad time. They are going to be reporting numbers which are going to be absolutely disturbing to look at and to analyze. So if you're willing to buy metals from 2-year, 3-year kind of time horizon, you're good. If you're looking at 3 to 6 months, 1 year, please stay away.
And that's pretty much the general consensus right now. But before we get in the next question, we're so short on time. So Preet, I want to nail it down. Top sectoral bets, what looks good, or top stock calls?
I've been very bearish on the markets all this while. So it's tough for me to, when you say, your top bets on the stocks.
But I have the list.
Yeah, I would probably end up buying the, oversold sectors. And I'm expecting that oil has gone down tremendously, and it could go down the $30 worst case, which is not going to happen maybe. So I would end up buying these oil and gas stocks with a view that oil will rebound. Maybe not as high as we expect, but there will be a significant rally once it starts kind of making sense for all the players in oil sectors. So oil would be a top pick for me, purely from the view that it's oversold. And I like maybe 1 or 2 names in the banking sector, and Axis Bank would be my top pick.
Gaurang, how about your views? What are the top stock and sector calls? I know it's an extensive list. Fill us in with a few.
With me always, there is the long list. List is very, very long. But yes, if you want to go with the good ones, then as a brokerage house at Geojit BNP Paribas, we believe private sector banks are the place to be in. One name is already mentioned, Axis Bank. The other names are ICICI Bank, though this one is going to be a little tough one because their numbers in the last 5 years were a disaster, and the slippages will be visible in the next 1 or 2 quarters. And the 31st March deadline set aside by the RBI could spell out more doom for the public sector banks. I'm not saying that the private sector banks will be left out. They will also suffer the fate, but they are relatively safer. So along with Axis Bank, ICICI Bank, Yes Bank, BNSN Bank, Kotak Bank, HDFC Bank, the list is exhaustive. These are some of the names that we have positive coverage on.
I can't even say take it down on your pen and paper. Take it down on your laptops and phones now.
I think he's saying buy the private bank index,
Yeah, so my sense is that these, and as a brokerage house, we believe that in the second half of 2016 calendar year, June, July, you will possibly see the banking pack reviving for better. And in that revival, you will possibly see the private sector bank take a lead from the front.
Okay, let's squeeze in just one last question then before we end the session.
Hello, sir. My name is Vinay. My question is from the automobile sector. So as we know, all the Indian automobile players, they supply to various countries across the group. So there is a slowdown in the global market, but the Indian markets are doing pretty well with the interest rate cuts. But now we see environmental issues are coming out, and now the central government has decided to skip BS5 and they are jumping to BS6. So how do all this impact the valuation of automobile stocks?
Okay. So I'm a great fan of auto, both 4-wheeler and 2-wheeler. So before pointing fingers, I think it is the job of the Petroleum Ministry to make the fuel available which is required for various upgraded standards, which ultimately brings down the pollution level. And it is no point passing the buck. Somebody has to be held should be accountable for, and I think they should take a stand and make these fuels available. The companies are nowhere far behind in terms of spending money in their R&D, let me tell you that. They have got sizable amount of money and they invest in R&D, because if they don't do R&D, they go out of business. So automobile companies will definitely spend money, but at the same time, the authorities in the government should play their role and should make these fuels available which are required for these cars to be driven. I am quite optimistic about the entire auto pack, and in some of the names, Tata Motors, Maruti, Eicher Motor, if you have deep pockets, is a great company. They make commercial vehicles and Royal Enfield bullet motorcycles, for which there is a waiting period of 3 to 6 months to 8 months, depending upon what model you want to buy. So there are some great names, there are some value creative names, but at the same time, I would say some bit of hard work is required from the Ministry of Petroleum and the respective authorities to make these alternative fuels available, which are of a higher grade and which pollute less.
Okay, thank you so much for those words of wisdom. The students here at TAPMI have been great. Gaurang, Supreet, lovely having you with us on this leg of the show. Unfortunately, we have to wrap it up, and I hope we enable all of you students to go to the head of the class when it comes to the stock markets.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.